China's economy is not growing as fast as it used to. For many years, China's economy boomed. It grew very quickly. This made China an economic powerhouse. Now things are changing. The growth has slowed down. This is causing concern both inside and outside of China. The slowdown has many causes. One major factor is the global pandemic. COVID-19 disrupted supply chains and reduced demand for goods. This hurt China's export-oriented economy. Another factor is China's strict zero-COVID policy. Lockdowns and restrictions hampered businesses. The slowdown is a big deal for China. The country is used to rapid growth. This growth has lifted millions out of poverty. It has also increased China's global influence. A prolonged slowdown could have significant consequences. The world is watching China's economy closely. What happens in China affects the global economy. Many countries rely on China for trade and investment. A slowdown in China could have ripple effects around the world. One of the biggest problems facing China's economy is a slump in the property market. For years, real estate was a booming industry in China. People saw property as a good investment. They borrowed heavily to buy homes and apartments. This led to a surge in construction. Now the property bubble has burst. Demand for new homes has fallen sharply. Many developers are struggling to repay their debts. Some major real estate companies have collapsed. This has shaken confidence in the market. The property slump is having a ripple effect throughout the economy. Construction is a major source of jobs in China. A slowdown in building is leading to job losses. It is also hurting industries that supply materials like steel and cement. The government is trying to stabilize the property market. It has introduced measures to boost demand. These measures include lower interest rates and easier lending rules. However, it remains to be seen whether these measures will be enough to revive the market. The Chinese government is very aware of the economic challenges. It has announced a series of measures to try and boost growth. These measures are designed to stimulate the economy. The goal is to encourage spending and investment. One key measure is lowering interest rates. This makes it cheaper for businesses to borrow money. It also encourages consumers to spend rather than save. The government is also increasing infrastructure spending. This means investing in projects like roads, railways, and airports. These projects create jobs and boost economic activity. Another measure is providing tax breaks and subsidies. This helps businesses reduce their costs and increase production. The government is also trying to boost consumer confidence. It is doing this through campaigns and incentives to encourage spending. The government's actions show its commitment to stabilizing the economy. However, it is still too early to say how effective these measures will be. The global economic outlook remains uncertain. This adds to the challenges facing China. Section 4. Effectiveness still uncertain. The Chinese government's stimulus measures have had some positive effects. The stock market has rebounded from its lows. There are signs that consumer spending is starting to pick up. However, it is too early to say whether these measures will be enough to put the economy back on track. One challenge is that the global economic outlook remains uncertain. The war in Ukraine, high inflation, and rising interest rates in many countries are all weighing on global growth. This makes it more difficult for China to export its way out of its slowdown. Another challenge is that many of the structural problems that have contributed to the slowdown remain unaddressed. These problems include high levels of debt, overcapacity in some industries, and a lack of innovation. The effectiveness of the government's measures will depend on a number of factors. These factors include the global economic environment, the implementation of the measures, and the response of consumers and businesses. Section 5. Challenges remain high. Despite the government's efforts, China's economy still faces significant challenges. These challenges are complex and interconnected. One major challenge is the ongoing trade tensions with the United States. The US has imposed tariffs on billions of dollars worth of Chinese goods. Another challenge is the high level of debt in the Chinese economy. China also faces demographic challenges. Addressing these challenges will require difficult decisions and structural reforms. Section 6. Mixed signals create confusion. The current economic situation in China is characterized by mixed signals. Some indicators suggest stabilization, while others point to continued weakness. This uncertainty makes planning difficult for businesses and investors. Retail sales show signs of improvement, hinting at recovering consumer spending. However, industrial production and investment remain sluggish. Mixed signals stem from lagged effects of government stimulus and global uncertainty. businesses and investors are cautious, adopting a wait-and-see approach. Section 7. The road ahead for China. The road ahead for China's economy is uncertain. The country faces a number of challenges, both domestic and external. The outcome will depend on a number of factors, including the government's policies, the global economic environment, and the response of businesses and consumers. One thing is clear. China cannot continue to rely on its old model of export-led growth. The global economy is changing, and China needs to adapt. This means rebalancing its economy towards domestic consumption and innovation. It also means tackling structural problems such as debt and overcapacity. The Chinese government has recognized the need for reform. It has announced a number of initiatives aimed at promoting sustainable growth. However, these reforms will take time to implement and bear fruit. In the meantime, the world will be watching closely to see how China navigates these challenges. The outcome will have significant implications not just for China, but for the global economy as a whole.